Risk management in trading involves identifying, analyzing, and mitigating the potential losses that may occur in the financial markets. It's crucial because trading inherently carries risk, and the goal is to maximize returns while minimizing losses. Effective risk management can help traders protect their capital, avoid catastrophic losses, and maintain a disciplined approach. The primary objective of risk management is to protect your trading capital. Without capital, a trader cannot participate in the markets. By managing risks, traders can achieve more consistent performance over time. It helps in reducing the likelihood of significant drawdowns that can wipe out previous gains. Proper risk management can help in controlling emotions. Fear and greed are powerful forces in trading, and having a risk management plan can keep these emotions in check. In trading, surviving long enough to capitalize on the opportunities that arise is vital. Risk management ensures that a single bad trade doesn't end a trading career. Advices and techniques for managing risk can be position sizing. Determine the size of your positions based on the amount of capital you are willing to risk. A common rule is not to risk more than 1 to 2% of your trading capital on a single trade. Stop-loss orders. Use stop-loss orders to limit potential losses on each trade. This order will automatically sell your position if the market moves against you by a certain amount. Diversification. Avoid putting all your capital into a single trade or asset. Diversify your trades across different assets, sectors, or markets to spread risk. Risk-reward ratio. Evaluate the potential reward of a trade against the risk. Aim for a risk-reward ratio of at least 1 to 2, meaning the potential reward is twice the potential risk. Regular review. Continuously review and adjust your risk management plan. Markets change, and so should your strategies. Education. Stay informed and continue learning about the markets. The more knowledge you have, the better you'll be at managing risks. Remember, even the best traders face losses, but those who manage risk effectively ensure that losses are kept within manageable limits, enabling them to stay in the game for the long haul.